Hi everyone, I hope you're all doing well, and today we're going to talk about worst of the worst stock and what happened to worst of the worst stock on Friday. And even today the stock is down a little bit, and we're going to talk about my thoughts on the company, where I'm at with the company, the trading update as well. And last week was a week of really big mixed emotions. I mean, it started off with the GNOG news and buzzing over GNOG, and then by the time we got to Friday the 13th, Tattooed Chef and Worst of the Worst were having a battle for who's going to be the worst performer, and these guys did take it, and it was off the trading update, which we'll talk about. And hopefully you guys that wanted to see a video on this find something useful with this video. And it's also very good for me. I always enjoy kind of when a drop happens like this, just kind of refreshing my opinion on this company and where I'm at with it. So yeah, hopefully it's useful, and hopefully you guys appreciate it as well. Is obviously I made a video about GNOG and obviously how well that did and the good news, I guess, but also talking about Tattooed Chef the other day about that drop and where I'm at with that one, and also talk about this company as well. Hopefully you guys appreciate the transparency as well, because I know there's so many people out there or so many channels out there that basically buy so many companies and then go, oh, look at these amazing gains, and then they'll buy a company that isn't performing and they'll just kind of sell it in the background and hope people don't notice, or never talk about it again. And I don't want to be like that. I've always kind of tried to build this channel on transparency and show you what's kind of going well and what's not going well, and my thoughts on things that aren't going well, I guess. So yeah, hopefully that's all good, and you will get stuck onto the video anyway. So we'll get started on worst of the worst stock. And first of all, I thought it'd be very good just to start off from a point of view of when I bought this company, what was my game plan with it. So I guess first of all, I only bought this company kind of 2 or 3 months ago, and realistically when I bought that company, when I buy a company, I'm kind of going in for like a long-term perspective, and I kind of think, okay, really I want to buy this for like 2 to 5 years, see profit and revenue grow, and I'll get share price gain. And realistically in 2 to 3 months, I'm actually still only like, if I was to hold this for a 5-year period, I'm still going to hold this for another 4 years and 9 months. So for me to make a dramatic decision of a company that's a long-term investment of 2 to 3 months would be crazy. Even if it's dropped a huge amount and the revenue or the profit might be a little bit worse than what I first expected, for me to make a dramatic decision off an investment on holding it for 2 to 3 months would be crazy for a long period of time. And that's one thing that I want to make clear right now. And the thing as well is, like, I've only held this company for 2 to 3 months. So for me, I'm still trying to build a position in this company. Normally for me to build a position in this company, it takes somewhere around 6 months, maybe up to 12 months, depending on how big I'm trying to make that position or where the share price is going. So for me, I've hardly held this company, and one of the big things that when I bought this company is that I bought this company and I thought it's been on a very good run. If you go back and watch any of the videos ago, it's been on a very good run, and I'm going to be very careful about how I build this position, because when you've been on a good run like that, the chances of a big pullback are massive. Now this big pullback is even bigger than what I thought, and in hindsight, if I knew it was going to be that much of a drop, then I would have probably waited to start building a position in this. But in hindsight, especially in the stock market, everything is easy. That's the thing. And it's probably a mistake from me that, and like I say, it's hindsight because it looks a bigger mistake now, but I didn't expect a big dramatic drop in that share price. But now we had the big massive drop, I could build the position. And that's the thing, is that I wanted to be very careful of. I wanted to wait for a drop to start building a position, and it happened and I started building a position. It's just that this drop has now gone further than what I thought it was. But am I spooked? No, because for me, I'm still kind of holding this for another 4 years yet. So I'm not kind of worried from that point of view. So I thought I'd make that very clear, that obviously I'm still quite early days into this position. And as well as that, I don't want to judge a company off a 2 to 3 months investment. For me, I'll judge a company over a long period of time, and then I'll see if it kind of worked out. So I wanted to make that very clear, and also that going down on stocks is the best for me. Most of my most successful investments, like in mode, I was down 20% on. Greg's, that's a recent one on your channel, I was down 30% on. GNOG that was bought out the other day, when GNOG I was down 20% on, and I made good money on that. Most of my companies that I ever buy into, Tesla I was down 30% on, and then that went up 1,000%. All the companies that I normally buy into in the short term, I'm not too bothered, and in fact a lot of them go down in the short term, and quite often some of them have been my best investments that I've ever made. And going down on position is what I like, because if I start building a position, and it starts going down, my average keeps going down with it. But as long as the price where I think it will go to stays roughly around the same, I'm then going to make even more money. Now with this one, it's a little bit different. Tattoo Chef, I would definitely say that applies to that one. This one, obviously it has taken a bit more hit, and we'll talk about that in the trading update, about the revenue and profit in the short term. But my game plan for this where I was at for this in the long term, it still exists. So for me, where I see the company going in the long term, this is just giving me more potential for more returns in the long term, and I'm happy about that. And quite often what I see at the moment, especially in the market that we're in, especially because of the market that we've had in the last 12 months, is people expect to buy companies, and then they buy the companies and then they just see the share price going up and up and up. But realistically, stocks don't work like that. Stocks in the short term can go anywhere, and you've got to be prepared that you probably will go down on positions in the short term. And I'm not too worried about that, because like I said, for me, it's a long-term goal. And so many times now I see so many people buy companies and they'll love a company, and they'll go down 10, 20, 30% on a company, and they'll go, oh, I don't like this company anymore now. Oh, it's a bad company, it's a bad stock, I want to sell that stock. But they only want to sell the stock because the share price has moved, rather than what the company is actually doing and performing. And it just blows my mind. If you kind of have that attitude in the stock market, you will really struggle, and you will not be successful in the stock market. I've always said the most tricky thing and the most important thing about the stock market is having patience. It's a waiting game. It's not a get rich quick scheme. And if you have the attitude of a get quick rich scheme, then you'll really struggle. And so I think that's the first thing, is for me, that's kind of where I was at buying the company, and now it's gone down. Hindsight, I should have, if I knew it were going to drop this much, I would have waited a bit longer, and then I could start building a position even more. But overall, a long-term point of view, this is a very early stage investment for me. So I guess that kind of sums up the company from here. The trading update, we'll go through the trading update together, but I'll just very quickly put it on the screen right now, and basically it kind of give an update into the last kind of few weeks of trading. It went on to say that sales were about down 15%, which also kind of links with that it is the worst time of the year, and also that obviously this has benefited so much from the CV situation. People now can go out to places, they can go on holiday. So I thought 15% down. I knew this company was always going to struggle for revenue growth in the next kind of 12 months. I think it'll do very well in the long term, but I knew it was going to be very hard numbers to beat. And for me, I actually weren't too bothered about the sales, because I thought to be the weakest part of the year, not historically for this company, and to have so much freedom. I don't know about you guys, but literally everywhere I'm going out at the moment, it's just heaving. Car parks are just so busy, roads are so busy. People are so excited to get out. And in my opinion, by the time we probably get down to, October, November, December, I think it kind of will all calm down again, and I think sales will kind of recover, and that'll be a better time of the year for best of the best. So from my point of view, I think to be down 15% with everything that's gone on, I think it's actually pretty good. So that part of the trading update didn't really bother me. I didn't think, obviously you would like it to be positive, of course, or flat, for example, it could have been better, but it didn't spook me that much, that wasn't awful to me. So I was actually pretty impressed with what was going on. I think the big reason, the one thing that I didn't like, and I think what most people didn't like, was the profitability, and I think that's what kind of spooked the share price. Profitability was to get slashed a huge amount, at the moment down 57%, guided for 63%, which is also saying it could get worse, which isn't a worse thing to do, because at least you can guide for it then, and if it doesn't happen, you've kind of sandbagged numbers, and then you can kind of come out with the next trading update, which is in October, and then go, oh, actually it wasn't as bad as what we first thought, and then everyone's kind of like, oh, it's not as bad as what we first thought. Share price could go up again from there, we'll see. I'm not saying that's a guaranteed, but kind of gives you an idea. So I think that was a good decision from management to go, you know what, let's just say it gets a little bit even worse from here, which isn't terrible. But yeah, down 55%, and guided for 63%. Overall, I kind of put this to a few things. I said marketing costs are going up, Facebook shares, hello. So I said marketing costs are going up, and also because there is less users being acquired, that means that obviously that kind of affects revenue, and because marketing costs are going up, they can't advertise to more players. All kind of comes into a circle and kind of connects with each other. They kind of said that hopefully the marketing costs kind of calm down a little bit from here. We'll see exactly if it does, I mean, that's kind of that. Basically, they said we hope, which is all you can say, I guess. But overall, you know, the profitability was to come down a fair bit, but overall, they're still going to be putting in massive amounts of profitability. And like I said, it just all ties together with the opening, the weakest quarter. So I think profitability will be hard to kind of match what they've done previously, but this is probably going to be the worst. You know, they're going to have. These numbers are going to be the worst year-over-year comparisons they will have, and this is the worst point for this company. I always knew that this is what I was always careful of, is that I knew the share price could get hurt because people kind of think short-term on this company and think only about a year-over-year comparison, and that's what I always thought is, you know, the share price will dip, give me a buying opportunity, and I can hold this company for a longer term. But obviously this profitability has spooked more people than whatever I thought it would, and obviously I never thought that, yeah, it will have hard numbers to beat, but I never expected, you know, marketing costs to go up that much, which is something that is very hard to kind of predict, I guess. So yeah. Now overall, at the current share price, it isn't too bad at the moment, because if it hits what it's kind of guiding for, which is 63% down on profitability, it puts it down at an 18p ratio, which isn't too bad. And also if it stays at 57% and doesn't get any worse, and this is the worst point in the company, it puts it down at a 14p ratio, which I think is actually really good for this sort of company. Now, just to kind of put this into like where I'm at with the company from where it's at the moment, you see here on the share price where people actually realise, oh, this is actually a really good company, we're going to start buying it, which was around April time, which isn't a coincidence. That's when all the CV stuff happened. We had the initial spike, and then we had an even crazier spike from here. Now, I saw this company here and I thought, oh, this is quite interesting. Let me buy a little bit of a position and let me just see if it goes down in value. And it did. You know, it had this big massive drop here, and I thought, okay, this is about where we're going to go here. Now, the only thing is, since then, it has gone down a little bit more, and it's down about 50%, which is what I'm kind of down about now. I never kind of thought, you know, it will only go back up to being up, you know, 89%, even some points, 70% up, because I thought, well, it will have a pullback because it's not going to do the same growth and the numbers might be a little bit weaker. But the thing is, you know, it's only 70% up now. But if we look here, the actual revenue from 2020 was 16 million, and it's now gone up to 45 million. We look at what they were doing in profit. They're doing about 2.7 profit. They're doing 11.4 profit. So, you know, this profit's like 5x, and the revenue's kind of, you know, over doubled, and the share price is only up like 70%. Now, it's not a totally fair comparison, because as you can see here, this is what the one analyst covering the stock is predicting now, is that it's going to do 5 million profit, which it potentially could do, and it's going to do about 40 million in revenue, which once again it potentially could do. It's very hard to predict exact numbers at the moment, but even then, you look at this here, you go, okay, if it does them numbers, if we just go from a 2-year change, 2.7, okay, we're going to be doing 5 million, so this is nearly going to be double of the profit that it was doing. And if we go from here, the revenue is going to be, you know, 16 million, it's going to be 14 million. So the revenue is still increased like, you know, triple of what it was doing a year ago. And then you look at the company once again, and, you know, just back to my point is like, you know, what, we're up 89%. So it does seem like this drop is a little bit of a massive dive off the cliff. Like I said, probably, you know, with the drop in profitability, slight drop in the revenue, it's probably fair that it did pull back. But at these sort of prices, if it stays here, I'm actually quite happy with this company and at these sort of prices. And if it drops down there and stays around here, and I'm confident that the revenue and profit isn't going to drop anymore, I'd be very happy to kind of just, you know, average down here and then hold this company for the long term. And it, you know, if it can grow profit and revenue at about 10%, I'll be very happy with this. And let's not forget, you know, the reason why I got into this company is that I think the revenue will grow at a good range. I think the profit will grow, and especially, you know, this year is going to be very hard with like year-over-year comparisons. But when we get onto 2022, 23, 24, 25, I think them year-over-year comparisons still should be able to be. It's got an amazing balance sheet. It's got a lot of cash on that balance sheet. It's got no debt on the balance sheet. It's a very high profit margin company as well. And also, I play this as a little bit of a dividend play. I think one of the big things with this company is that while they kind of generate a lot of this cash, is that maybe not this year, well, you probably still get a normal dividend, but I'll probably still get a normal dividend, and if it kind of all calms down, they probably will play a little bit of a special dividend as well. So I'll be picking up a bit of a dividend yield off it. So my thought was over the next 5 years, as a bit of a UK company with a bit of growth, a little bit of a dividend, I thought this was a pretty strong play, and I still believe in that a huge amount. Obviously the big thing is that the share price has pulled back more than what I ever expected it to pull back, but my kind of bull thesis on this company still exists, that I think I've got a company that will do quite well in the long term here. And the big thing now is this slowdown that we've had in this trading update that wasn't good and it was deserved the drop, is this is all priced in. The big thing that I can't get now is people that kind of look at this company now, and some people might be in the position that I'm in, and I'm down about 50% or something on this company right now, and I see people considering, yeah, that company there, I might sell this company now. And it's like, what? Why would you sell the company now? Like, it makes no sense. Like, this company has, the share price has fallen off a cliff, but this trading update, and which was a horrible trading update, and also has a little bit of sandbagged in as well. For you to sell the company right now would make absolutely no sense, because this dip in revenue and profit is priced in. Why else do you think it dropped 50%? So the crazy thing is that I'm seeing people like consider actually selling this right now, and it's like, why would you sell it? Because it's all priced in. And as well as that is that now this is all priced in, it's got easy numbers to beat. I always said the big thing for me is that it had some hard numbers to beat, and that what made me a bit nervous is that it had to go off the CV numbers. But now guidance is coming down, it's getting to quite easy numbers to beat. And sure, what I'm going to say here, what I'm going to say is I'm going to actually jump a little bit here, and I'm actually going to say my game plan about this company now and my thoughts on it, and kind of like the risks and the rewards to what my game plan is. So basically for me, like I said, I'm about 50% down on this company right now. For me, this is the trading update, which was ugly. Now the thing is if this is the bottom of this stock, here, and this part here, this trading update, it doesn't get any worse than this, and let's not forget, it's obviously got the slowdown kind of getting priced in now. We're at the weak part of the year, so you'd hope that October, November, December we'll see some improvement. Is that, for me, it could still get a little bit worse, which I do want to be very careful of. Don't get me wrong, I still believe in this company long term, but there's no point me buying into this company just yet if the numbers could get worse, because the share price would probably go down. So for me personally, what I'm going to do is I'm actually going to wait to the October trading update, and then the October trading update should give me some good idea. Okay, the slowdown is stopping now, and then we've hit a bottom, and then obviously that will be the same on the share price. If on the October trading update they come out and go, okay, that slowdown is still carrying on, then what will happen is the share price will go down, and then there'll be no point buying into the company. So for me, I'm waiting to the trading update in October, and then I can judge where they slow down, if it's stopped, or if it's carrying on. Because if it's carrying on, the share price will go lower, and there's no point buying. Because for me, the risk that still happen with this company is that obviously best of the best, as I've always said, it isn't a big position of mine, because it is a small market cap company. Small market cap companies, the share price can move a huge amount, like you've probably seen, and that's one of the risks. The other risk is that it has the other risk is that it's been up at has been on a good run, and if I buy on a good run, the chance of it pulling back is a huge amount, which has kind of gone now because it's already happening. And the other thing is that the moat on the company, like best of the best, is never going to be as I've always said, a Greggs, a Boohoo, an S4 Capital, a Hollywood Bowl. It's never going to be one of those companies, because at the end of the day, the moat is very small. For someone to, and the competition is starting to creep in, to be fair, is that there's a lot more players on the online doing these competitions, and for me, it can never be a big position. So I can't afford to average in this a huge amount. But I still believe in the company. I still think it's going to have good revenue growth, good profit growth, balance sheet's good. I'll get a dividend as well in the company. I still want this to be a little decent position in my portfolio. But I also don't want to get into a thing where I'm trying to catch a falling knife, because if I'm trying to catch a falling knife here and it keeps going down and down, they'll get to a point where I can't average in too much more. So for me, I'm going to wait to October, see what happens there. If it is the bottom, then I can start averaging in. If it does start to go lower, then I'll just watch the share price, wait until we get to a trading update where management go, okay, we're actually starting to see growth again now, and if profitability starts moving in the right direction, if revenue starts moving in the right direction, then the share price will start to recover now, because you've got to remember right now is where we're at is this horrible trading update priced in. So if this is the bottom, the share price won't particularly go much more than this, and you'll even see if actually they say, or the I actually think they're reporting on Halloween. If they go and out, say, October in the last 4 weeks, we've actually seen profitability get better and revenue get better. Everyone's going to be like, okay, this is the bottom, let's go buy in. And sure, I might. It's something that I don't always say to do, but if I actually wait, it's probably safer than actually seeing this go down a lot more. So yeah, for me, I'm actually not buying this one, even though one of the big things I would normally do on a dip is buy it, just because I'm kind of waiting to make sure this is the worst, and then I will probably average in and build my full position up probably around, November or December time. Still same as before, I don't want to make it a big position because it is a bit more of a higher risk play. It's not on the lines of Greg's or Hollywood Bowl, for example. But yeah, I'm still very confident on the company. I think that now it's even lower and lower down. I do like that, and I think the profit and revenue is still very strong on the company. And overall, I probably should have maybe waited a bit more. But like I said, it's very hard in hindsight. It's always easy because you know the outcome, but at the time, there was not much to kind of predict that the marketing would hurt it this much and profitability would go down this much. As I always said, I knew it would go down or be flat because it's hard numbers to beat. But overall, I'm still got plenty of room to kind of buy my position, and I still believe in the company in the long term. So yeah, there's no chance of me panicking selling this one at all, and I still think that over the next 5 years, as it advertises more, goes international more, it will steadily increase the profit and revenue. That means the share price will go up. It's got a strong balance sheet. I'll collect some dividends off it as well. And this year, the next kind of 12 months will be, a bit of a hard period for it. But the thing is the more it is going down and the outlook's getting decreased, it just means that in the next year, it's just going to have easy numbers to beat. And hopefully that's kind of like my whole game plan overall summed up, really. I'm still believe in the company. Obviously, it's gone lower than what I ever thought it would, but I still think this is a strong company for the long term. Sure, not one of my biggest positions, but I still think it'll, over the next few months, you'll probably still see me kind of average into this one. There's definitely, for sure, I'm definitely not panic selling out of this one at all, which is one thing that I'm going to say. So yeah, hopefully that was all useful. There was a lot of information that I tried to get in there. There's a lot I could have said about it, but I didn't want to kind of overload you with all the thoughts I've had with it, but hopefully that kind of gives you a bit of a overall summary where I'm at with everything, I guess. I feel like I'll probably talk about this one maybe a couple more times in the future as well, just where it's all at with everything. But yeah, overall, that's my plan with everything. Hope it was useful. Hope you enjoyed it. If you could hit the like button, that'd be amazing, and I'll see you in the next video.